Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. Today's topic is about buying investment property in the US. And I just purchased and closed my very first single family home purchase with my husband. Not too long ago, and that's why I wanted to use this opportunity and use this video to share with you the process that I've gone through and also the reason why we're buying where we're buying. But the reality is that I don't know all the numbers and I don't know why we're buying where we're buying. So that's the reason why I have my Chief Investment Officer, Erwin Sito, also known as Mr. Chen and also known as Cherry Chen's husband, also known as Mr. Hamilton himself. To go through all these numbers and research and why we're buying where we're buying and our deal and our process as well. Welcome, Erwin.
Hi, thanks for having me. My name is Erwin. I've been a landlord in Ontario since 2005. I've had personal equity interest in about 40 properties. We currently hold still quite a few properties. This time last year we held almost double that, the current. We've sold about 5 properties of our own over the last 18 months. I am a realtor since 2010, and I used to have a sizable realtor team working with investors. So we've done close to $500 million of income property transactions, maybe 3 pre-construction condos. So it should be no surprise that we have about 45 millionaire real estate investors within our clientele. So we've had a lot of success investing in small residential real estate and just renting them out long term. And we're just bringing this model to the States because it's no longer favorable to be an Ontario or for many parts of Canada landlord in Canada. The numbers are better than the States from our research, and we found partners to help us out, ourselves and our clients, to invest in the States, including ourselves, which we closed on our property just 3 weeks ago in San Antonio, Texas.
Okay, San Antonio is easy to remember, but I know that the town isn't really called San Antonio. But we are going to dive deeper into it. Before we dive deeper, make sure you give us a thumbs up if you like our YouTube channel. We are approaching 30,000 subscribers as we speak, but hopefully before the release of this video we'll get to 30,000. So make sure that you hit the subscribe button below and give us a thumbs up. If you have any questions about buying properties in the US, make sure you leave the comment in the comment section below. And if you want to start searching for properties, there is a link in our show notes to share with you where you would be able to search some of these properties that are available to us. Now, without further ado, I'm going to turn Erwin into this research machine, live research machine, to show you what we're buying.
Thank you, Cherry. That's actually a pretty good introduction. I love to research. It's not so much I love to research. I absolutely can't stand losing money. I come from, in university I studied commercial banking and economics, and then I went to business school. So I love to make money. But I actually hate losing money even more than I like making money. So that kind of leads me down a path of doing a whole lot of research because my family's future financial independence depends on our ability to be strong investors, and we need to do the same thing for our clients. So let's start off with why are we talking about single family rentals. Like I mentioned, we just had a lot of success here in Ontario with small residential investment properties. For example, our own portfolio, we sold 4 houses this year. It took an average of 22 days to sell them. So for most real estate investors, well, that's for anyone out there in Canada listening, 22 days average to sell my income properties, that's likely below your days on market for your local market. And anyone who's holding income properties right now, I'm sure many of them would be over the top excited to get that. Because in my experience in speaking to other investors out there, many people aren't even getting showings. So again, this real estate winter that we're in right now has proven that our investment model is quite a good one, right? All right, so let's talk about just a quick high level. Warren Buffett is a big fan of single family rentals in the US. I highly recommend everyone watch the YouTube. If you just, you can see the title of the YouTube video right there. Just copy it, stick it into Google. You can listen to the whole thing. To summarize, Warren says single-family rentals are an attractive asset. because you can finance them with a 30-year mortgage, as in not just the amortization, but the term. You can eliminate interest rate risk for 30 years, fixed term. And when rates fall, go refinance and get another 30-year term for your mortgage. And that is a terrific deal according to Warren Buffett.
So, just to stop you right there, not to interrupt you, but like, I guess that's the part that is different between the US and Canada, right? But in Canada, you can get 30-year amortization or 25-year amortization, but that 25-year amortization calculation is only used for your monthly mortgage payment. Your term is still 5 years. Essentially, every 5 years, you have to go back to the bank, renegotiate or accept whatever terms that they provide to you at the time and sign off on renewal for another 5 years or 3 years or 10 years, whatever it is available. But in the US, there is actually 30-year term and 30-year amortization. Correct me if I'm wrong.
Yeah, so your mortgage is fixed for 30 years.
So that's the huge difference between the two countries because of the 2008 mortgage crisis that happened. The government introduced this 30-year term mortgage that you can commit for 30 years at the low interest rate. So that is a very interesting difference between us. And the second point I want to talk about is a lot of people talk about single-family home as if it is a beginner strategy. And look a little bit, if you talk a lot to like veteran investor, they would look at it, well, this is, it is a beginner strategy, a mom and pop thing. So, but it sounds like Warren Buffett has a different idea about it. And I personally look at it as if it is just as an asset class that we own, no difference than shares. Public company traded shares and multifamily is another asset class. What do you think?
I think there's parallels between the two, and actually this quote is actually a wonderful one that kind of draws the parallels between the two. Now, one of my favorite people in the world that I've actually modeled a lot of my podcasting off of, Tim Ferriss. I think most people are familiar with Tim Ferriss, the best-selling author for The 4-Hour Workweek and so many others, one of the top podcasts in the world. Anyways, he was able to ask Warren Buffett this question. If I had $1 million to invest, but he also gave context. He's really busy doing other things. He doesn't want to be full-time. Warren's response, and then Tim's question was, what do I do with $1 million to invest? So then, I love this quote from Warren. Again, it kind of divides, I think this divides all investors into two categories. Are you professional/active, or are you passive and lazy like me? Unless you're willing to invest 15 hours a week or more to research and be active, then you're professional, go ahead. And if you enjoy it, go ahead. Go be an active investor. Pick your own stocks, do flips, whatever you want, right? If you're not willing to do it, you are thus an amateur and should return and be happy with market returns. So to me, Warren's speaking directly to me, giving me the okay to be lazy. I like being a long-term, boring real estate investor, buy and hold investor, buy for value, renovate, hold for the long term. So I think most investors can appreciate that. If you don't have 15 hours to give up or more a week to be an active real estate investor, then be lazy, right? I'm personally lazy. So unpopular opinion in Canada, I'm very unpopular right now within the real estate community because most real estate professionals cannot make money selling US income properties. I am licensed to sell real estate in Ontario, and I'm a partner with Share in the US, so we can cover all 50 states. So the way I see it is we don't have a bias except towards cherry picking the best of the best locations for landlord friendliness and for investment returns. Make sense? All right, so for those who don't know, just quickly, it's better to be an investor in the US because landlords have way more rights in the landlord-friendly states, right? There's no rent control, again, in landlord-friendly states. There's no such thing as divisions of government or that are set up to defend tenant rights. Non-paying tenants are replaced with new paying tenants within 90 days. That's an average, right? That's an average, right? Earning US dollars probably makes sense for almost every Canadian listening to this because almost everyone listening to this, almost all their income and assets are denominated in Canadian dollars. To be denominated in the US dollar makes, I think, financial sense for pretty much everyone, and I think most financial planners can agree with that, to have some sort of income and currency diversification into the world super mega global power country and the global reserve currency. All right, no basements. Where we're buying in the States, there's generally no basements. So housing affordability is better. And for anyone who's an experienced landlord, especially anyone who's been going through all these weather issues lately, which is, in my opinion, why in today's market, especially knowing what I can do with my money in the States, I personally wouldn't be putting any money, significant money, into renovating basements. And going forward, Cherry and I probably won't be buying any properties, income properties that have basements. So we remove that risk completely. Good property managers don't charge fees if vacant. This is something that we can negotiate in the States, harder to do so here in Canada. The important reason for that is if property managers are able to charge fees when your property is vacant, there's no incentive to rent out the property. Versus, again, in the States, our compensation is much better aligned. Oh, and one of the great things about being in the States is we can get debt service coverage ratio mortgages, which are commercial style, which means if the rent covers your mortgage, taxes, insurance, and condo fees, you get a mortgage as long as you have a down payment, right? And you can have as many as you want. So again, I get this question a lot because Canadians are used to having to do much more aggressive real estate investments, and Cherry and I are we're used to this as well. We used to have several student rentals and duplexes, as in houses that we converted the basements into apartments. So very invasive, capital-intensive projects to force better income from the property. Now, so questions from Canadians all the time is, why don't you do multifamily? So here's to quote Jason Parsons. So follow Jason Parsons on Twitter if you can. He is a real estate economist. He puts out wonderful content, and here he is talking about America Homes for Rent. America Homes for Rent, they own 53,000 houses in the States. So he's quoting from their earnings report. The America Homes for Rent is a publicly traded company on the New York Stock Exchange, so they have to explain themselves to their investors all the time. So I personally like this. So when people ask me why not multis, a lot of my research will center around what does the big money do? Again, what does a company do that owns 53,000 houses? And they also build rentals. A large part of their portfolio is they have land, they can build whatever they want. So they deliberately choose to build single-family detached because, to quote them, attached homes are on the market much longer and they're having concessions. As in your vacancy period is longer, and rent concessions, meaning you have to give things up, like renovations or like free appliances, or you're gonna repaint something, or like interest or rent-free periods. So from a business perspective, one of the biggest owners of real estate in the US is saying single-family detached is the way to go, right? And then I always refer to this chart all the time with novice investors. You see here, the stock market's done wonderful. I'm not against diversification. On average, the S&P 500 has done 5.5% increase every year, on average, since 1970. Real estate's only done 5.5%. Oh, stocks are much better, isn't it? But keep in mind, right? Real estate investors leverage. We get mortgages so that we can leverage, we can buy more houses and invest less in the house. And so a leveraged return, assuming a 25% investment, as in like down payment and closing costs and renovations, assume that's 25%. If you're only in the property for 25% and your annual appreciation of the property is 5.5%, that works out to a 22% return. And alone, and that doesn't include mortgage pay down nor cash flow, right? So that's double the stock market, which is why you see so many people have gotten rich real estate investing, right? And then just simple numbers. Every good investor can do math. Simple numbers. So here, just a simple comparison between a Toronto condo, which is very similar to a Vancouver condo, an Ontario duplex. This duplex here was located in Kitchener. We sold it for our clients, and I'm going to compare it to my client, Shane, who lives in Montreal. He bought this property off market in Memphis, Tennessee. So again, simple numbers. Let's just go straight to the bottom line. 1-bedroom Toronto condo, fully loaded. You're expected to have a negative cash flow of about $1,200 based on market rents of mortgages, right? On that Ontario duplex that we helped our clients sell, you're negative about $500, right? My client's single-family home in Memphis, Tennessee, and I've converted these numbers to Canadian dollars so we can do more of an apples-to-apples comparison. He's positive $231, right? But notice the difference in prices between all these properties. notice the difference between the down payments. To me, this is pretty simple math. Why would anyone buy an Ontario property where you have the landlord-tenant board that's completely tenant-friendly, and tenants basically have an unwritten agreement that they cannot be evicted for 8 to 12 months and not pay you rent during that time, versus investing in a landlord-friendly estate like in Memphis, Tennessee, right? So to me, the numbers are they tell a different story than most people will say out there in Canada, right? And again, look at the cash flow, big difference. And for those who understand commercial real estate investing metrics, given cap rates, right? You're under 3% for a condo, you're low 4 for a duplex in Ontario, you're over 7 for this Memphis, Tennessee property, all right? So again, on our own journey, we've sold 5 of our own properties. We've created a legal entity in Wyoming. We have another entity in the state of Texas, and we bought a house in Texas. So earlier this year in January, that's the Alamo behind me. I made a site visit to Texas. I was in Alamo and I was in Austin as well. So Terry asked me to speak about the property that we closed on about 3 weeks ago. So again, since San Antonio, Texas, we got this property off market via a wholesaler. This is a 2,200 square foot house. We bought it for $265. That works out to $120 US per square foot. For all you condo investors who know cost per square foot, I'm pretty sure you think this is insane. And I'm pretty sure you all think the cost per square foot of a condo is insane as well. Anyways, so this is, our property is in a suburb of San Antonio, Texas. This property is in a cul-de-sac. It's a pie-shaped lot. It's 4-bedroom, 2.5 bathroom, built in 2005. So not that old, no basement. Again, $265, projected renovations are $35,000. Because the sellers are staying, we're actually holding off on doing a lot of those renovations until they move off. The sellers decide to stay as renters, and they're paying us $2,300 a month. So, and then from my own calculations, because I always believe every investor should do their own due diligence, from my research, a conservative after repair value for this house is $320 in today's market, and we're probably beginning a bull cycle quite soon, in my opinion. Cap rate on this property, and the funny thing is, our cap rate on this property is 5.1%, which is the lowest among our clients. But because we had the sellers moving in right away, well, not leaving, essentially paying rent, we have no vacancy, and again, we made money on the buy. To me, this deal was a no-brainer. We had to do it. And to tell you how easy this deal was, Cherry and I were literally at our friend's cottage, and I was minding my own business, making barbecue, and then this email came in from the chief investment officer, Cher. He wanted to send me a few properties that they're writing offers on, and asked if I was interested in any of them. I said, heck yes, I'd take these 2, right? And along with that, he sent me numbers. So purchase pro forma, I think the more plain English term is projected financials. What did the numbers look like? These are annual numbers. So again, don't have time to go through this all. My cap rate is 5.1%, which I'm quite happy with, especially for a property in a stronger market as San Antonio, Texas. Right? Here's my purchase summary, and to close on this property, we needed $97,000. We didn't have to give all that money up front to close, but we need to keep some money on hand in order to fund the expected renovation, which is all cosmetic. Here's our cash flow for the property. So on the left is the annual cash flow number. On the right side is the monthly. So every month we're going to cash flow $59 in the first year. And through the magic of no rent control, my cash flow improves over time. Right? So find me that deal in Canada. I haven't seen it. And part of the due diligence was we got a home inspection report. This document was 93 pages. This is the most detailed home inspection report I've ever received in my career of being a real estate professional since 2005 and 2010. Right? We have video walkthroughs from a home inspector. We actually had a termite inspection as well. You can see 2 of these are videos, so we have walkthrough videos by the home inspector. Right, here's some pictures. Again, properties on a cul-de-sac. Cherry and I used to live on a cul-de-sac, so we absolutely loved it. Here's some pictures of the interior of the property from the home inspection. You can see it's a pretty nice house. It's a big kitchen, big living room. Again, Here's some details from the home inspection, no issues. Again, because again, the house is only from 2005. That's the principal bedroom and the principal bathroom, double sink, 5-piece bathroom. So it's hard to see on the left, but there's a standalone shower and a standalone tub, right? This is the secondary bathroom that the other bedrooms use. And the bathroom actually, the shower and toilet has its own room. This house is absolutely amazing. And then I get this question all the time. Of course I investigated Alberta. I have lots of friends in Alberta. Invest in Alberta, they always say. It's the Texas of Canada. So just some quick numbers. GDP for Canada, 2.1 trillion. Texas, 2.4 trillion, right? Alberta, 0.34 trillion. So not really a comparison, not really comparable. And you compare that to population. At 2022, Canada was almost 39 million. Texas was 30 million, right? Texas has way more GDP per person than Canada, right? If Texas was a standalone country, it would be the 8th largest GDP economy. It's bigger than Canada, bigger than Italy, bigger than Russia, who's a world superpower, bigger than Australia, right? So no thank you, I'll invest in the Texas of the world. And again, the investment going on in the States is absolutely historic in terms of size. 81 billion being invested to build semiconductors, which is microchips, in the state of Texas to create 10,000 high-paying manufacturing jobs, right? And again, financing is 10 times easier than the States because it's all commercial style, even for us non-residents of the States, such as Canadians. Again, we're specific to San Antonio. Texas is investing another 531 million to expand their manufacturing facility in San Antonio, Texas, which means 400 more jobs. And then in recent news, Elon Musk has said that they're moving SpaceX and Twitter from California to Texas. So SpaceX alone is about 7,500 employees, and literally among them are rocket scientists. So they're probably really smart and they probably make a lot of money, right? And to give context, I track manufacturing investments in US and Canada. So 7,500 employees from California expected to move from California to Texas alone, compared to if you add up all the new manufacturing investment in Canada, we're just under 10,000 jobs. So just to give you context about how much historical amount of investment is going on in the state of Texas compared to Canada as a country. All right, is that a mouthful?
All right, so we just got educated on why we're buying in Texas, and so this is the reason why we're buying in Texas, and also you saw some pictures of the house that we just purchased with the projected cash flow. Erwin and I are always looking into buying cash flow positive properties, just so that the whole reason behind buying properties, real estate in general, is to for long-term investment. I don't need the money immediately, but I do want it to grow over time. So that fits that criteria. The second criteria to purchase the real estate, for me at least personally, is that I don't have to put money into the property to carry the property. It doesn't make sense for me to buy an investment. I keep putting money into the property. And that was also the reason why we started looking into single-family home market in the US. Anything to add, Han?
Yeah, just folks, remember, negative cash flow can be devastating. I literally have spoke to a gentleman who has 2 newer construction condos. He's negative $1,400 on them each, and he lost his job. Imagine the type of financial stress that is on his family. So invest for positive cash flow, stay safe.
Yep, so for anyone who wants to get more information or see these type of deals delivered to your inbox, you could use the link in the bottom here to start an account and start searching for properties. You can schedule a call with Erwin as well to talk about potentially investing in this crazy market of Texas. I have no idea that Texas is the 8th largest economy in the world, if it's its own country on its own. So fantastic. If you find the video interesting, make sure you give us a thumbs up. If you have any questions about investing in the United States, make sure you leave it in the comment section below and we'll answer them all. Until next time, happy Canadian real estate investing.